Hello. In this demonstration, we will create a discounted cash flow model. The model will be for a hypothetical situation, say a retailer that sells TVs. Let's begin. First, we go to the website myfinmodel.com. On the website, scroll down to the Models section and select Basic DCF Model. The model data is entered in 4 steps. First, we provide the basic model parameters. For this example, we will model the cash flows for 5 years on an annual basis. So leave the type of period as year, and number of periods as 5. Let's assume that the starting period is March 2017. So let's select 2017 for starting year and 3 for starting month. Let's assume that there is only one product that the retailer sells. So select 1 for revenue categories. For the costs, let's assume that there are 3 types of costs: cost of the goods sold, salaries of staff and rent for the shop. So select 3 for cost categories. Assume that there is 1 item that is capitalized and 1 loan that the business took. Select 1 for CapEx items and 1 for number of loans. Leave the currency as US dollars. At this point, click on Update Form. Now let's go to the second step. Click on Revenue Data. We will need to provide the volume and price details of the product. Type in TV in the first row and assume that the retailer sells 0 TVs in the first year, 1,000 TVs in the second year, 1,500 TVs in the third year and 2,000 TVs in the rest of the years. Type in price in the second row, and put the price as 500 for each of the years. Don't worry about inflation. We will put that in the last step. Now let's go to the third step. Click on Cost Data. We have to put in data for 3 cost items. Type in COGS in the first row and put in 0 for the first year, 100,000 for the second year, 150,000 for the third year and 200,000 for each of the last 2 years. In the second row, type in salaries and put 100,000 for the first 2 years, 150,000 for the third year and 200,000 for the last 2 years. In the last row, type in rent and put 100,000 for each of the years. No need to worry about inflation in this step. In the section, Capitalized Items, type shop equipment under item and a cost of 500,000. Put in 1 under the period incurred. That means that the items were purchased in the first period, and select 10 years for the time for depreciation. Now the final step. Click on Financing and Other Data. First, the debt loan details. Assume that the retailer took a loan of 500,000 to purchase the shop equipment. Type in the details assuming that the loan is for 5 years and the retailer pays an interest of 10% per year on this loan. Finally, the other info here we can provide the tax rate, the discount rate, inflation for revenue items and the cost items, accounts payable and accounts receivables. We will use the default values for this example, but you can change them as appropriate. We are now ready to run the model. Click on Run Model. In a few seconds, we see the results. At the top are some summary charts showing the revenues and costs, EBITDA and net income, cash flows, free cash flow, and debt service coverage ratio. Click on Financial Statements. You can now see the income statement, balance sheet, cash flow statement, free cash flows, and NPV and IR. Click on Supporting Statements. You can now see the detailed calculations of the revenues, costs, taxes, depreciation, debt, working capital, cash position, discount rate factors and debt service coverage ratio. If you had logged in, then you will see the option for saving the model. You can now run a new model, change parameters for the same model or download the results in a spreadsheet. Thanks.